to let me know. So you guys are welcome to our review today of the trading week. Now we have 1, 2, 3, 4, 5 days of the trading week. So we're going to look at the review. We're going to look at what happened, how many of us made money, how many of us lost money on these days, and why. And also some of you are going to ask questions, and I'll be taking your questions as well. So yeah, that is me, guys. You're seeing me for the first time. Welcome. This is Charles. For those of you who be longing to see my face, I believe you can see my face from where you are. Okay. Yeah, we're ready. Now, I wanted to wait a few more minutes. Let's see if we can still get more people to join. At the moment, there's 7 of us already. Okay, more people are coming in, so we just accept and let them come in. And also prepare your questions. Like I said, prepare your questions. If you have any questions, I'm going to be allowing some of you to ask questions today. All right, so yeah. Well, some of you are wondering, who is this guy? I'm Charles, and then I'm one of the top mentee of Jeffrey Benson. Some of you may have heard my name somehow, somewhere. I don't know. Well, so yeah, but we're not here to talk about that today. We're just here to talk about the reviews of the trading week. We're looking at the trading week. What happened on the trading week? So I want to take us step by step to analyze the trades and what would have gone wrong and what would have gone right. And if you made money this week and which of the day did you make money, we'll look at that. So I think that's how we're going to start this review today. So some of you that made money this week, which of the day did you make money? Let us know. Which of the day did you make money? And also we'll look at that day. Which of the day did you lose money? And we'll look at that day. And so those are the things we're going to look at. All right. So let's start from your question or your day of profit. Just put on the chat box the day you made profit. For those of you who made money, what day did you make money? Put on the chat box, what day did you make money? Let's look at it. Let's look at the day you made money on the chat box. I'll be waiting for that, as many of you that are joining us. Okay. So just put it on the chat box the day that you made money. The day that you made money, and also the day that you lost money. Put it on the chat box as well. So we're going to be looking into that to be able to create a very experiential conversation today on this review. So we'll be able to touch. As you're logging in, I will encourage you to mute your I want you to mute as you're logging in. Just mute yourself, except you want to say something, you raise your hand, and then I will allow you to ask your questions if you want to ask questions. So as you're logging in, I will encourage you to mute just for us to have a clean recording section of this review today. Some of you may have, especially those in my group, in my Telegram group, I will send this copy of the video to you so you can review it yourself and then use it to always enhance your analysis whenever you're preparing for trading week. All right, we already have a comment section there. I'm a newbie, bro. I want to learn trading. Good. You're welcome, Eben. You're welcome. So stay tuned with us, and then we'll talk about that, how you can learn trading in the process of time. We are here for you, boy. We're here for you. Thank you for coming. Okay, now let's go straight to the point. I think we have more than enough people now to get started. We're about 10 of us right here on the live chats. Welcome every one of you. Like I said, I am Trader Charles. I am Charles Brown. My name is Charles, and some of you know me, some of you don't. So most of you may not. but like I said before, I am one of the mentee of Jeffrey Benson. Some of you already know Jeffrey Benson. Yeah, it's old time mentee. So we're here together. But I want to share with you my opinion about the market past. Now, what you see on my screen, for those of you who can see my screen, I believe you can. What you see on my screen right now is a chart on 15 minutes time frame, GDP USD on 15 minutes time frame. And that's what we're looking at. And I want to move to the days of the sections. Like this is Friday, yesterday. This is Thursday. This is Wednesday. And this is Tuesday. This is Monday. So we start from Monday. Monday morning. Here we are on a Monday morning. And I want to enlarge this. I want to enlarge this so that you guys can see it. It's a Monday morning. It's a Monday morning. So I'm going to help you to see things now on the slides. So let's do the review so you can see. This is Monday morning. We came out of consolidation. All right. We came out of consolidation. Here. We came out of consolidation there. Don't do that next time. Go. I'm sorry, guys. Just a little bit of distraction there. Yeah. We came in on the consolidation day, which is the weekend. You can look at all of that. But here we have the section, London section beginning. Now, I want you to pay attention to this. The London section began, if you put on this bullish candle, began right, let me move this, right on 7:45. That means London time 07:45. So that means that was about 15 minutes to 8 o'clock. And then you find this bullish candle to the upside. Amazing, right? Now, let me just remove all of these stuff so you can see this circle. We're dealing with this circle here. Let me just remove that line so you can see it properly. All right. This is what we're dealing with right now. Here. This is the section. This is what happened on Monday. When you come on Monday morning and you're looking at your chart, what do you do? What do you expect? Remember the top-down analysis, right? Everybody who is already a trader here, you know what I mean. You can do your top-down analysis. You can see already from the previous days to this previous Monday, we're dealing with week 5 of the year. That is week 5 of the year. I want to pay attention to that, week 5. So we can enter week 5. We enter week 5 with a bullish run, as you can see. So that's the first thing you see. An M pattern here. And then those that sold here make some money and got out of this candle. All right, depending on how many pips you got. Congratulations. That was the days before the weekend. And then throughout the weekend, that consolidation. Obviously, we don't trade weekend. We know that this was Friday night. Up till that time, the market closed. Then on Monday morning, sorry, on Sunday night, let's say from here, on Sunday night, price began to consolidate. On Sunday night, see on Monday morning. Now, you're studying this and you know you can't trade consolidation. No trader is advised to do it because I have lost account and money trading consolidation. So I have to learn from that. It pains, but you got to learn something by paying something. All right. Now, here is where the market began to move. I always tell people, when you want to trade, also consider two things. First, the trend of the market, and also the section that you are trading. What happens in that section? We all know that volatility takes place in London section and New York section. That's where you have the big move. Now, if I put on my section break on now, you will see that every section that you see on the screen is showing you a very detailed move of the pair GBP USD, a very detailed move, a minimum move of 60 to 80%, 80 pips on a daily basis, a minimum move. But sometimes we can have consolidations, and that's what we're going to look at. So what happened on Monday? Straight up, on Monday, something happened here. There was a breakout in the Asia section. I want you to pay attention to this. There was a breakout in the Asia section. And that breakout in the Asia section happens with this bullish candle. Now, I want you to observe something in this review. I'm going to be showing you different things here, because if I check the psychological level, now this is the high and low of the week. For example, I'm using, this is the strategy that I trade. So price is below the high and low of the week, but that was on Monday, right? So we can see that. Just a minute, I'm trying to admit a lot of people that are joining in. Guys, you're welcome. Thank you for joining. I really appreciate you all for coming. I just want you to leave your questions at the comments chat section if you have any. And if you want to talk or ask question by you speaking, you raise your hand and then I'll give you time. But for now, let's do the review and then we can look into that, into your questions. Okay. All right, let's go back to it. Now, this is the section I'm talking about. So right here, we have a bullish candle that printed and break the section. So this bullish candle here is the one that break this section above. All right. Now, most of the time we teach people to trade breakout. If you learn to trade breakout, you would have made money on this move, at least a bit, on that move to the upside. So let's assume we are doing review right now. Let's assume you enter this trade from here. Let's say you long from the breakout. Immediately you notice there's a breakout with a bullish run and you long. Let's assume that was your trade. How many pips did you got? 20 pips. You would have gotten 20 pips straight up. Your stop loss below that previous low. All right. You put your stop loss below the previous low, and then you're looking at this market right here. Straight up. Okay. You're looking at this market straight up now. So that would have been your take profit for the first day, for the first money. Now let's look at when that market began to reverse. We find out that the market reversed when it was 09:45. That means about 10 minutes, about 15 minutes to 10 in the morning. So you'd have just made your first piece of 20 pips that morning, and then you'll be done. That is 1 to 2 ratio. You'll be done for that day or for that money. If you want to trade this pull down or this reverse, then you would have traded it as well. But how would you have known that there was a reverse? Because you can see already that there is a level here. There is a resistance here. Price got resisted at this top. And then you can see the next candle that came up was a red candle, and then a weak bullish candle. And then the next thing that came up is a bearish candle that engulfed the previous two. Let me enlarge this so that you can see what I'm saying. We are still talking about Monday here. Here, we're dealing with this particular pattern now on leaving this trade. Assuming you enter this trade on this breakout, you would have gotten about 20 pips up to this place, 20 pips, right? By trading breakout from the Asia session. And then you would have gotten out of the trade on this candle, this red candle, or on this one, the second one, not on this one. If you get out of here, you would have lost a lot of pip, maybe 5 pip to 6 pip. But if you have gotten off on this weak rejection, and you know already there is a psychological level here, which is a resistance. Remember, psychological level are seen as resistance and support, right? Good. So now you can see, first, you might be thinking it's going to break through. No, he didn't. This candle told you it wasn't going to break through. The next candle was a confirmation. Then I'm out. I'm out on the next candle. That's what I would do if I was on that trade. So what would be next? Because there's a rejection here already, I'm expecting price to change direction because you're already given a confirmation that is not breaking this resistance level. So on Monday, that's what we got. This candle that printed was a confirmation, but on this one, we would have waited after the close of this green candle to give us this candle before we enter the trade. So I would have entered the trade immediately this candle prints. I would have get in here, put my stop loss below here, and then target down. Why? You say, well, there's a line here. Can that be an issue? Well, that is the highs and the low of the week, depending on the trade, because that's the high of the week. So price can actually, you know, validate or invalidate any of them. It can validate or invalidate, or that means it can serve this line, the high and the low of the week, can serve as a resistance or as a support. It depends, but it doesn't really hold ground as the psychological level would do. So as you can see, obviously, price broke down with a very big bullish run. How did that happen? I mean, bearish run, a very big bearish run to the downside. How did that happen? Because of this. You see that candle there? That candle tells us the next bearish candle is going to push down, because that's a force there. You can see massive force to the downside. So now that's what happened on Monday. So let me bring out the section so you can see. Let me bring out the section so you can see. I don't know how many of you traded this, but this was a mind-blowing. Look at that. That's the first move of the morning that takes place, the first thing that happened in the morning. And then there was a breakout. So what I'm trying to say, if you are a trader here, once you see there's consolidation from the Asia section, be waiting for a breakout. First, you want to catch that few pips in the morning. Wait for a breakout. And I'm going to give you evidence of that in other explanation in the days that we had this week. For instance, this is the Asia high, Asia low. There. That section. And there was a break to the upside. So at that break to the upside, you can catch some few pips. In most cases, when there's a break to the upside, price just keep going up. If there's a break to the downside, price just keep going down. So you need to understand how this works. It's very important. Very, very important. It's not all the times, but pay attention to it. That's what I'm trying to say. That's why I'm doing the week review now to see how the market works, what happened. So pay attention to breakouts. Early section before London session breakout, okay? Or we call it, London session breakout. So pay attention to that. Now, look at this trade that happened on Monday. One would have thought price was going to go down. But at this moment, remember, the previous day, price was beginning to form a bullish because it's beginning to move away from the 200 moving average you can see on the screen. All right. There's a 200 moving average. This one is the 15 minutes, the white one there is a 15 minutes moving average, and the pink one is the 5 minutes moving average. And you can see prices moving away off to the bullish run. This is how the bullish run started for the week. And then because of that, price couldn't go down because we were waiting for a break of the high and the low of the week to make the decision of what is going to happen. So what happened? Price eventually moved up to the upside for that day. So you can see that there was a weak rejection to the downside before moving up. Now, you may not have catched this trade to the upside because you already caught, you were thinking it's going to go down. Probably you caught this one, the breakout, or you caught this sell here to the downside and you were done for the day. But price eventually move up, and then consolidated for a while. Now, that was a trade that happened on Monday. And that's why a lot of people don't trade on Monday. Why? Because of this mess. You see, this is kind of a mess. You have to be smart enough to trade this kind of market. All right. Yeah. Chiman, I will take your question in a minute. All right, just hold on. Just keep your hand raised. I will look at that in a minute. Give me a bit of time. Yeah. Okay. Now, this is Tuesday. Now, again, consolidation. I told you something, guys. Pay attention to this. Again, consolidation throughout the Asia section. On Tuesday happening, we finally had a bullish run to the upside. Why? Price is above the moving average right here. You can see 200 moving average of the 15 minutes and the 5 minutes. And if you even have a 200 moving average on the 1 hour, price is still above them. So this is how we started finding the bullish run this week. We can see consolidation. Some of you didn't notice this. Look at that from the Asia section. Consolidation. What happened? A breakout. Push to the upside. Did you guys notice that? Come on, if you notice it, talk to me. Do you notice that? Look at that. A breakout. Imagine you enter the trade right here. Here. And because there's already a breakout, or you waited for this candle to finish printing. Because as you see this bullish candle, come on, guys, this is so interesting. As you see this bullish candle, you know the next one is going to be a bullish run. Why? Because you can see that the money makers have got into the market. Something is happening now. This candle is not printed by retail traders. This is not a retail trader candle. Anytime you see things like this, take note. Something is about to happen. This kind of candle is a move by the money makers. It's not a retail trader candle at all. Pay attention. We, the retail traders, don't have the money to move candle like this. Trust me, we don't. This kind of move is done by the billion holders, big time investors. So once you want to join the money makers to enter a trade, this is how you do it. Now look at it again on Tuesday morning. After consolidation, be happy when you are seeing a consolidation like this. Be very happy because you're watching out for something. Now, because I already know that the price is going to go up because prices are above the moving averages. I knew that it was going to go up. So I was ready that the breakout is going to be to the upside. Because on Monday, I already see a sign of it that it was going to go is an uptrend. So what do? We position ourselves or here. Imagine if you had bought this market, if you have bought this market at this level, let me put it there so you see it. You long from here. Immediately you see that breakout. Put your stop loss just right below the previous low. This is the previous low. Or you look into this one, previous low, this one here. You can use this one as your previous low. Sorry. You can use this one as a previous low or this one. But I think this one will be safer, right? As a previous low, put your stop loss there and what ends? And then you're waiting for price to move to your direction. Take your profit at 1.5 ratio, 1.5 ratio at most, because you don't know how the market is going to go far. And that's it. You're set. And guess what? That's 38 pips from where that price was. I mean, it depends on your account balance. It depends on your account balance. If you are trading these for 38 pips, I mean, that's something. Depends on your standard, your lot size that you're using also. That's something there. So that happens on Monday. I believe you guys are paying attention to what I'm repeating here. We have found in two major sections now, on Monday and Tuesday, a breakout that just happened that made us to position ourselves to get some money out of the breakout. Now, you may have had your trade when he got to the level and still hold on, but you see, when price got to this level of resistance, what happened? Price reacted. Price reacted. That's when you're supposed to get out of the trade quickly. All right, you get out of trade, or you hit your take profit, you're out. Okay, but price pullback. This is called pullback. I know some people trade pullbacks. That this move doesn't mean that price is going to reverse and then start trending down. No, we just began an uptrend, bro. An uptrend just began. Price cannot be reversing now. So expect pullbacks. So after the bullish run, price pullback. Okay, you can still hold on your trade if you want, but some of us will get out of the trade and wait for the pullback, and then before we re-enter again. So that pullback came, and then you re-enter. That's it. But some of you will say it's easier said than done. That's right, you're correct. It could be easy now to say it because we're seeing price like this. But if you have this mindset, if you understand how the market works, it will become easier for you when you are live trading. You begin to understand, especially what I'm trying to analyze now. You begin to understand. I began to see all of these moves when I started paying attention to what I'm telling you now by doing review of every trading week. Some people call it back testing. Wonderful. I call it doing a review of the trading week. So if the trading week is, I'll look at what has happened in this week. Where did I miss it? Where did I go wrong? How did I get it? So this will help you to create even your trading journal. All right. Okay. Now this is what happened on Tuesday. Let's move to on Wednesday. Now the market closed in London session. We're out of it. Then look at that again, guys. Asia session, consolidation again. Look at that. This is Wednesday. Come on. Come on. Look at that. Again, consolidation. As you can see, I already marked it out. I was waiting for it. Guess what? I hop on this trade right here. I was on this trade at this point in time here. I got into this trade immediately this candle closes. And guess what? My stop loss was way below here and I was okay. Why? Because I knew price was going to go up. Why? Because we are already on a bullish run. Price is trending upward. So what? I waited for the pullback, and then that was another entry for me, and then took the price until it hits my take profit. Right there. Right there. But now, when I saw this, initially, when I saw this line here, there's a line here, is a support and resistance level that has been recognized over time. Okay, I saw this level and I was waiting that price is going to return from there or consolidate, but it didn't. It broke through. Price broke through that, and then what we have then was this move. So the consolidation actually started above the psychological level, which I was thinking is going to drop or make a reverse. And then what happened? So this was a beautiful trade that happened on Monday. So again, watch out. Watch out for breakouts. Very important. Very, very important. Then on Thursday, day before yesterday, actually, we were expecting a news on the British pounds. Okay? Because there was a news. So price consolidated again. Look at that. I marked it out on the consolidation. And guess what? Something happened. I was about to sell this market. Actually, I was on this sell. Now, this is why I'm doing a review, because I lost a lot of money on this trade. And I want to tell you why. Price began to go below the moving average on the 5 minutes. I thought, okay, price is going to drop. Price is reversing. So if you see the study of this candle, if you pay attention to this candle, you will see that the multiple red, the red candle is much more than the green candle, right? That's to tell you the pressure of the seller in the market. You can see the pressure of the seller entering the market right from the consolidation. And it started sliding down. So here it consolidated a Y. And it was on top of the psychological level. But I could see that the pressure is rising from the sell. So I did a signal that we are going to sell. Some of you who got my signal that we're going to sell, which I also posted in our group there. Guess what? Price did a walk on me here. My stop loss was on this previous high here. All right. That is where my stop loss was. And I entered my trade here. When price began to move, I was in profit. I was smiling until this candle printed. Let me clean this up. When this candle printed, oh God, I was shocked. I thought, okay, that's just a game, because I could see price is already below the moving average, 200 moving average of 5 minutes. So I thought, okay, I'm going to wait. At this push up, I added some lot size to this, hoping that price was going to break and come down to this psychological level. Guess what, guys? It was not. It was not. I'm grateful that my stop loss was here. I would have had this bullish candle wipe up the whole thing. All right. But I was trading on a profit account. All right. And there was one profit account I was trading on, one particular one I was trading on. So I was using that profit account, but my aim was just to pass that stage with this trade. But guess what happened? Price went up with this bullish candle. And when this one printed, I was still holding because my stop loss hasn't hit yet. I was still holding. And when the red candle printed, I was happy. I said, wow, it's coming back now. I told you, I was telling someone, I told you it's coming back. Guess what? This candle printed, this one printed, and I was out. And that's why risk management is one of the most important things in trading. Actually, I messed up on that trade because I had a lot of lot sizes here, which I was hoping. You know, we talk about stacking. Guys, beginners, don't stack here too. If you are starting out, I will advise you, if you're opening any trade, just 2 or 3 maximum trades that you can open in a section is enough. If you're stacking, stack at most 3 of your trades and risk wisely. I was having almost like 6 or 7 position here, and with some good lot size. I'm talking about 3.5, 3.5, 3.13. I'm talking about good lot size because it was a big account. Yeah. And price went up and took me out on this candle. And I was in loss. And at this time, I have breached my daily drawdown at this time on that account. Now, I'm telling you that because you need to pay attention to this. It happens. There is no professional trader today that will tell you he never lost money. It's part of the game. You have to understand that trading is part of losing, or losing is part of trading, whichever way you put it. But the tenacity to understand, the wisdom to understand what went wrong and never repeat it again is what helps you to grow in the market and become solid in trading the next day. So here's what happened on this trade. Price, a news was released. Immediately news was released and it went up, straight up, crazily. Why? price already again broke above the 15 moving up, the 5 minutes moving average of 20 moving average. This is the 200 moving average, sorry. This 200 moving average. Price broke above it already with this candle. Can you guys see that? Already with this candle, price break above it. So at this time, 15 minutes has been broken. This is 15 minutes time broken. So that would have given me a sense that I'm going to buy. But guess what? Because I was already hit out, I was not happy about it. I just thought I'm not going to trade this news. So if I have some courage around getting into this trade on this particular candle while it was opening up on the news, guess what? My stop loss would have been below the moving average of the 15 minutes. This one. I would have been somewhere here. And guess what? If you guys pay attention to this, what I'm trying to let you know, sometimes news can favor you if the trend is going to the upside or to the downside. If you are trading with the trend, all right? If you are trading with the trend, news can always favor you. And I'm going to show you that in the second news of the NFP that happened yesterday. Now look at that. I would have put my stop loss here, but that would have breached my rule of 20 pips, right? But I knew common sense would have told me price can get down here because it's already broken the 15 moving average before. I mean, the 5 minutes moving average of 200 is already broken it before. So it was going to get here. I know price might eventually want to touch the white moving average. So what? I would have put my stop loss there normally, logically. But this time, my psychology was already like, I'm not going to trade this. I just lost some money, so let me relax. That was what I was thinking. All right? And guess what? Price would have gone up if I have settled down and just say, what? Let me trade. Look at that. Look at that. That is a whoopee of 66 pips from that level. 66 pips, bro. Imagine how many lot sizes. Okay, imagine my lot size. I think total lot sizes that I used on that trade on Thursday was about 30 pips. I mean, 30 standard lots, almost close to 30 standard lots. Now, if you calculate 30 standard lots on on 66 pips, woo, that's about 6,000, close to 10,000 pounds or dollars, sorry, that would have made on that. But that is it. That's just how trade is. You have to pay attention. Now, there was a met down. And most of the time, you can see this bullish run. There's always a met down that follows. But you need to pay attention to met downs also. Some people traded this met down. Immediately, this candle break on this level. At this time, me, I was just relaxing. I didn't want to trade anymore. People started selling. All right, that is selling the met down. But remember, your goal is to understand that it is an uptrend. So you would have just put your take profits at this moving average and get out of the market. But you have to ensure that your trading system allows you to do so. It's very important. Okay, now let's move quickly. I believe you guys understood now what happened there. And also, I just explained how I lost some money on Thursday. All right, now look at what happened yesterday. Amazing trade. Amazing trade. Look at what happened yesterday. Consolidation, which obviously, because the mindset, I want you to see something here. Something already happened because we are on uptrend. What would I be expecting on this consolidation here? What would I be expecting that price will break above? All right. And then we'll keep trading to the upside. But no. Look at what price did. Price broke below it. Some people started selling yesterday from this place. Because what time was that? If you check, it was at that time, that was 4 in the morning. I was still sleeping and snoring at 04:45. But Look at this candle when it break below the moving average of the 5 minutes. Look at the trade. That was 6 o'clock in the morning. This would have given me, on this pullback, would have given me an opportunity to enter the trade. But guess what? I was waiting for a bullish to buy. I thought this was just a myth. So what happened? But I did an analysis. I did an analysis of a sell. Okay? But because of the news, I was very, very careful not to trade yesterday because of the news. I was expecting to buy. So I was expecting the move to go, the news to still go up. So I was waiting. But guess what? I did an analysis for us to sell. And because this move took place, I was skeptical about it. So I didn't follow through. But look at that. Those that traded the NFP, look at what happened. They were favored. If you haven't traded this one, let's say you didn't enter the trade to catch this move. This, how many pip? This was like from here downward, that was like 41 pip, man. That's 41 pips. Look at that, 41 pip. Straight up, you would have gone out of the market and be done for the day and not trade NFP. So there could be some great move before NFP. Pay attention to that as well. I know some of us don't trade on Friday, but there could be some good pips to be picked up. If we have stayed to this route that I'm showing you, can you imagine from Monday to Friday, there is a particular principle that repeated himself that I've been trying to get to you guys. Breakout. 28%, breakout. Breakout. Always pay attention to the breakout from the London breakouts. It's very important. It's very important. If you study that, you will be consistently having some pips on your bears. Now look at this. Price broke out, gave us a 50 piece, and then comes to this psychological level. What it did, it created a wick. I'll get out of there. Right from there, I'll just up out of the market. Because this is an exit. It's telling me to get out. It is wrong for me to still be holding trade when I see this wicks. And I know some people trade that way. They will still hold on. They'll say it's going to break. It's going to break through. No, no. Don't hold the trade. It's time to let go. You are a day trader. Get out. That is a sign to get out of the trade. Now, if that doesn't make you get out, this candle should make you get out of the trade. This candle. Now, if you check down there, if I put my candle there on the first green candle, you see down there to my indicator, it shows a green. That green button there, that round green button there, that shows there is telling me. Let me just do this so that you see what I mean. I want you to see this. This is one of the beauty of review. Look at it. Look straight down to that line. You see to the section. The indicator there, the below the indicator there is a special indicator I use for exit and entry, to exit a trade and enter a trade. Now look at that. That was telling me to get out of the trade already. With that thing printing there, I'll get out quickly. If I didn't get out on these few rejections, that candle should tell me to get out. Now, this is how you understand the chart and how to trade to exit a trade that may be going against you. So if you have kept it on, probably you would have experienced this pullback there and then lose some few pips. Probably you'll be thinking it's going to go up now, and then you, out of the fear of losing, you close your trade. And guess what? Price dropped. So this was an obvious pullback because price has already broken below the 200 moving averages of 15 minutes and 5 minutes. Price has broken below it. So we are not in a downtrend. So what price have done was to retest that and then push down. So those who sold yesterday and traded the NFP make money because of this understanding. They saw this. They saw this. They saw this. So next time we pay attention to things like this, it will help. They saw this and it was vivid. Look at that. It was clear. They saw that price has broken below these moving averages and there's possibility that price was going to drop. There is no way that the NFP news was going to take the price above it again because it's too far down. There's no way. So you can see immediately the NFP was released, price was dropping instantly until it fizzled out. At this candle, look again, I would have been out of NFP trade. Again, on this candle, I would have been out. Straight down there, you see, I would have been out because that is a sign for me to get out of the trade quickly. And there was a trend line there that was found, that was tested. A trend line was, I could go on and on that trend line.
I'm on Zoom.
But that's not the point today. But a trend line there was tested. It got to that trend line and it stopped. Instantly, it stopped. So that would have given me a sign, get out. For those who traded the NFP, that's it. They got it. And then to try to buy this is rubbish. It doesn't make sense. The market had just ended. First of all, there was a major move that came from the downside to the down from the beginning of the day. Breakout strategy, London session breakout. Guess what? You got for 40 pips and you were out. 40 pips. If you have done that, you'll be out 40 pips. London session like that. And then a pullback, you wait for opportunity again to it to break below that line, below the moving averages again. Now you can see the moving average has crossed. So we're expecting, what are we expecting next week? More of selling, because price is below it now. So we're going to be looking at consolidation throughout from on Sunday night, all right? And then we'll wait for that move on Monday morning, which is going to have some few consolidations at this level, all right? And then we'll wait for a pushback, a push down. Remember, this is a pattern you can see. It could be that we have something like this, a flat pattern. The bit of going up and then smash down. So pay attention to model trades. So this is exactly the review I wanted us to do. And we are there. So ask your questions. Any question? What do you think about what we've just experienced? What is your take on this? And if you like what we've just done, please comment and let me know what you think. It's very important. Very important that I get a feedback from you guys. Very important. Very important. So, yes. Let me look at your questions. Somebody raised their hand earlier on. Is the person still there? All right. This one says, are you a Ghanaian, please? No, I'm not a Ghanaian. The volume is low. Has the volume been so low? I'm not sure about that. Oh my goodness. Okay, I believe you guys heard me. What is the name of your indicator? Okay, that one is a paid indicator, okay? It's not a free one. So if you want to know about my indicator, you have to get in touch with me personally, or join my Telegram group and I'll discuss some things with you there. Okay, yes. Any question? What do you guys think? Who's asking a question? Any question? Sorry, I just shared my group there so that you guys can see. Any question? Please, I'm trying to, you guys can see I'm looking at the question here. I can't see any question here, so I'm waiting for you guys to ask question. Any question? Let's look at it. Where is that lady that was raising her hand? Or that guy that was raising her hand? Their hand. Okay, yes. Yes, okay. All right, I'm gonna unmute you one after the other, and then you ask your questions, okay? Chidi was the first person asked to unmute. Was it Chidi? Oh, Okay, go ahead. Ask your question if you ask a question.
No.
Okay, that's fine.
No, I don't really have on any. What I reason that you even that is the review you did anyway. It's very, very perfect. I love it. If maybe you can continue like this, I know I will benefit more from it, more and more and more from it.
Okay.
At least every weekend like this.
Awesome. We'll see
That
what we can do.
like
We'll try our best. Thank
All
you.
right. Yeah,
All right.
thank you.
All right.
You.
Okay. Yes, Mark.
Good morning.
Yes,
I want to appreciate what you're doing because I'm really tapping into the knowledge and just encourage you because it's like I'm just tapping from your knowledge. But I want to ask,
yes,
with this breakout strategy, do we need the M pattern and the W pattern, or it doesn't really matter?
At the moment, you can see that doesn't really count, because if you wait for the M pattern, which obviously most of us didn't trade all this breakout because we're waiting for M pattern. But if you have started the section early before the breakout, you've discovered that the M pattern already formed before the breakout on the consolidation. Let me show you what I mean. Look at this. Look at this market. What do you see?
Head and shoulder.
You see head and shoulder, right?
Am I right?
Hold on. The best way to do it is go to a line chart. What do you see now?
An M pattern.
Aha. That's it. And then it started pushing down. So if you are paying attention, you would have seen the M pattern already created before you woke up from your bed on this particular trade. You got it now?
Yeah, I got it. Thank you. And I really, really appreciate what you're doing. I'm one of your followers. Thank you.
Oh, great. Awesome. Thanks, guys. I appreciate you too. All right, the next person, let me see. Who's the next person that asked the question? Yes, Mark again. Are you raising your hand? Okay, put down your hand now, Mark. You have been answered. So, Chima, sorry, Chima has been the first person that asked to raise your hand since. Sorry, Chima. All right, Chima, over to you. Ask your question.
Okay, so most of the time there's always a fake out.
Exactly.
After the consolidation. Yes, there's always a fake out. Now, how can we spot the fake out?
Okay, thanks for that.
So that we'll not be involved in the fake out.
Yeah, thanks for that question. I think let me go back to the previous market. Sorry. Now, sometimes there will be a fake out. You're right. For instance, this is a fake out. This is an example of a fake out that we just experienced on Thursday. That blue mark that actually made me lose a lot of money. I would say blue account because it was a huge loss size that I used there, because I believed on all my analysis that we're going down. I so much believed it. So here is a fake out. This is how you know. For instance, you may have waited. The breakout was really here on this candle. That was a breakout, as you can see. All right. This was a candle breakout.
Yes.
Good. Now, what you would have seen next would have been, you wait. If you have entered the market, let me remove this. If you have entered the market on this candle, remember this candle opened up and pushed down as a red candle, remember?
Yes, sir.
Good. But because price is close to the moving average, you would have been very concerned. So in most cases,
okay,
you have to pay attention to your moving averages. they have a great element on trading. They have impact. You pay attention to it, because I didn't pay attention, because this time I actually removed the moving average. And most of the time when you're trading, your mind is on the trade, not on the moving averages. You're looking at the profit or losses that you're getting. So you pay attention to this. Look at what happened. Price broke above it. This was a breakout, but it was a fake one.
Yes.
And the fake one was proven. Immediately, price was shrinking back up and close. I will be out. Because this candle, do you know what this candle means? Who can tell me what this candle means?
No. Hammer.
Okay. Other people will call it the what? What other name for it?
Hanging man.
The hanging man. Okay. What indicates? What does it indicate? Is it not a reverse pattern, a reverse candle?
It's a reversal.
It's a reverse candle.
But normally,
yeah. Tell me. Go on.
But most people will say that after a good reversal, that I should wait for a confirmation of the next other candle that is going to form before I decide.
Yes, exactly. But the reality is, you can already see there's a heavy, I mean, come on, look at this weak rejection, bro. This massive weak rejection should scare you and actually get out of the market first and wait.
Okay.
You understand? But again, look at what I did. I didn't get out. Remember I said that before. Was it on this trade? Yeah, on this trade. Until this candle printed. So I left my trade because I didn't want, I was like, no, this is not happening. It's going to drop, it's going to drop, it's going to drop, it's going to drop. Price went up and then the news came out. So initially, this would have been your exit because this was a fake breakout. This candle shows it was a fake. Let's assume you didn't go out of this market on this candle. And then you decide to go out of the market on this candle. Come on. This candle alone should let you go out. At least you would have secured a minimal loss of how many pips? Maybe like 10 pips or 15 or 5 pips. Let's see. You would have secured 14 pips of loss if you enter here. Okay, that would have been 14 pips. It's better than, I mean, losing a lot. But again, that's why we talk about risk management. If you have entered that place with just a minimal loss size that your account can hold, like you put one position with a minimal loss size, then if price was going up, depending on your account, you will have been losing very little. So if you close out of here, you won't be feeling it. Do you understand now? So I normally teach my students risk management. So if you want to learn more about risk management, that will help. So yes, I think I've answered your question, bro. Somebody was asking about the Telegram group.
Yes,
the Telegram group is just my name, my trading name. As you can see on my trading name, that's my Telegram group. But I could put a link. I'm going to put a link on the chat so that you see my link, so you can go there and check it. All of the links are there that you can contact me with. It's just one link. Hold on there. Let me just copy it and paste it. That's the one, this link. Okay, copy link and address, and I will paste it to you now. Okay, just hold on. So those of you who want to join us on the Telegram group, I will be glad to see you there. All right, be glad to see you there. I'll put it on the chat right here. That's the link. And you click on that link, it will take you to a beautiful menu, just like a menu. You have a menu, and then you go through it. You will see free Telegram channel there, free signals. You can go there and click on it. And then for Zoom meetings that I'm going to be holding all the time, you will see the link there also. You can click on that, and you always, everything you want to know about my reaching me or contacting me is via this link that I just posted. So you can actually go there and find for yourself. All right, let me see if there's more questions. Any more questions? Let's see. Yes, 2 people are raising. Okay, Chidi, I'm done answering your question. Chima, sorry. I've done answering your question, so you can put your hand down. And Papi, over to you.
Okay. Good morning. I'm sorry. Good afternoon, everybody.
Afternoon. You're welcome.
Yes, I just wanted to clarify something. There was that candle you mentioned. The candle, the second blue, yes, that hammer. Somebody said hanging man. I think I just wanted to clarify that that's not an hanging man. An hanging man and a hammer, they are literally the same thing, but they are used in different contexts. A hanging man is found in a hanging man is a bearish reversal candle that is found in an uptrend, while an hammer is a bullish reversal candle that is found in a downtrend. That's just what I wanted to clarify.
Okay. Thank you so much for that. Thank you. I appreciate that. That's great. Yeah, you're right. So this one is different from the hanging man. All right. So yeah, any other question? Do we guys understand now? This is what would remember. This is the question session now. We're done with the reviews. We've done our review for the week, and now we know what we're expecting to look out for in this coming week. All right. So any other question? Let me check. If anyone has a question, someone.
Yeah.
Yes, please ask.
Okay.
Well,
I have a question, please. Okay. Good afternoon.
Afternoon.
Thank you so much for the session.
You're welcome.
Sorry, please. I had my network had an issue, so I was just in the place where the Friday trade when it got to the trend line, and you're still talking about sign of reversal, as in that when the price got there, even if you are selling, you're supposed to leave when my network trip off. So since I've been trying to come in, I couldn't. I just came in now. So could you please help me with what you discussed there for that? That's number one. And also the question, and also I want to ask is regarding trade management risk.
Yeah.
What percentage of risk do you get for the week before you leave, you stop trading?
Okay.
Yes.
All right. Back to the Friday trade yesterday. That's the first question. Now, if you pay attention to this, price started to sell around 4 and 3 o'clock in the morning, around 4 o'clock in the morning. Now, the M pattern was already given around that time. We have this M pattern here. That's it. That gave us that trade. Okay. That was the M pattern that gave us that trade. Now, it happens most of the time. You have to pay attention to that. But at this time of the day where the M pattern happened, you were already sleeping. You were still sleeping. You still in your bed. So there's no way you would have traded this at all. All right. But if you are awake, you would have caught it from there.
Yeah.
But some people began to enter the market here. And what time was this? This was around 6 o'clock in the morning. So some people started selling from 6 o'clock in the morning. Because of this, what happened? They may have seen this, that price broke below the 200 moving average of the 15 minutes time frame. I mean, of the 5 minutes time frame. This one is 5 minutes time frame. This one is a 200 moving average of 5 minutes time frame. Price already broke. So for those who trade 5 minutes, they are already selling at this time. They have gotten earlier entry and selling at this time. But assuming you didn't catch that, you missed all of this. You would have had the opportunity to enter the trade at the break of this 15 minutes moving average. All right. This 15 minutes moving average give you opportunity because price broke below it. But guess what? You had its barrier here. There was a barrier. Price had rejection, weak rejection, weak rejection. At this time, you would have thought, I'm in the wrong trade right now. I shouldn't have been here. Fine. You would have gotten out of here and wait for this pullback. So immediately the pullback ends. How did you know that the pullback has ended? Look at it here. The pullback has ended. So right now, this is an entry. But you'll be considering this psychological level, this zone here, this support zone. There could have been a each. But meanwhile, you have entered the trade anyhow because it's already selling all the way. So you are joining the trend to sell. But because it was NFP, it's a news that a lot of people don't want to trade and it's dangerous. So people actually that sold got out of this market right here. They got out of it. And then many people sold from this level after the break of the both, the 200 moving average. This is a sign that the price is going to go down. Imagine you couldn't sell at the first candle. Let's say you didn't sell here, but you now sold on this one. After the break on the psychological level, you would have benefited from these pips to the downside, which is how many pips? Only one candle now. I want to measure it. That's about 40 pips already, almost 40 pips. So you'd have gotten a free 40 pips of that trade just by entering at this level here. Let's say you were just playing conservatively. You didn't want to get into all this rush. You miss all of this opportunity, but you would have looked at for these moving average crossing. At the crossing of the moving average, that was your entry. Or when price broke below the two moving averages, that would have been your entry, and broke below the psychological level, that would have been your entry, straight down. But because of NFP, for me, I didn't trade this NFP. So because of the NFP, I didn't even bother to look at it, but people did. So that was on Friday trade. Now, your second question was, about risk management. How much do you risk? It depends on you. It depends on your account. If you have $500 account to trade with, and for the week, you are targeting to make 10% on that, which is 50 pounds or $50, then you can. You can. All you need to do is to set your risk or your lot sizes based on risk management to that particular amount that you're targeting for the week, which is 10%. So you're going to use your risk management to know the lot sizes that you need to trade for each day to hit your target. So you will be targeting $10 each day. As soon as you make $10, you're done for the day. You make the $12 the next day, you're done. You make $10 the next day, you're done. If you make more than that, it's a plus. It's a plus. But your goal for the week was to target 10% of your balance account, which is your goal for the week. Now that varies. If you have a very big account, I'm not expecting you to be targeting like if you're trading for a profit account, trading a profit account, I'm not expecting you to trade to get into a trade expecting to get 10% a week. No, you may be risking a lot more and losing a lot more. So the reality is you want to target, if you have like a 100K account, 50K account, you're targeting like 5% of the in the month or 10% in a month. So you're targeting like 2%, 3% in a week. You see that? And then you trade accordingly, and then you'll be in a comfort zone. But those are based on risk management. So do you understand now what that means?
Yes, I don't know. The part remaining. I'm talking about when you're having like a losing streak, like when you're like, for example,
okay, when you are losing, when it went to stop. Okay.
Yes,
okay.
you know, yes.
Okay, I got you. Okay, when you're losing.
When you know that. Yeah, I'm coming. And what I'm trying to say, there's something I experience sometimes. I get to maybe I'm getting profits there, and I got to a particular stage. It now look like You just be losing. The week, 1 week you lose, second week you lose. As in, how do you handle things like that? When to leave market, as in, okay, I've gotten my maximum loss. I need to like what percentage do you set? And so, okay, no, I don't think I will trade again. I think I have to get this cleared of what is going on before I come to the market.
Okay.
Yeah.
Now, your risk. Let's say you're risking, you have $10,000 account, right? Let's say you have $10,000 account, all right? And you are risking 1% of that $10,000 account, 1%. Okay. And that is 1K. You're risking 1K out of 100,000. I mean 10K. You're risking 1K. So once you lose 1K, that's the time to get out and say, I need to sit down and watch what's going on. I need to reset. Maybe I need a training, I need a mentor, I need something. You don't have to wait to lose all the 10K first. You just need to get, now you're getting it. The first thing is, if you are risking 1% of your account, you say, well, I have 10K, but the amount I can afford to lose out of this 10K is if 1% of it, which is 1,000. If that is it, that is it. So you make up your mind that I'm not going to lose. If I lose more than this, no, I'm not going to let it. Immediately it hits 1K of your losses, and you are still missing it. You are still losing. You lost all the way to the 1K. Then it's time to reset. Now, the maximum you can go is 2%. If you lose 2% of your account balance, then it's time to reset properly. You have to press the red reset button, the red one. If you're losing 1% already, you can press the amber button as, okay, I need an amber, I need a gray, I need to sit down, reset a bit. Let me see. But once you're losing 2% already of your total balance, then it's time to get a mentor, or it's time to get somebody to guide you. You need help then. Because if you continue, it's going to go to 4%. If you continue without any reset, it's going to go to 5%. If you continue without reset, it's going to go to 10%. Before long, it's 50% off. That's why you have some people have 500 balance to start with, and then the next thing is now 100. The next thing is left with $50. And then they will say, I lost all my money. But you didn't do proper risk management. You didn't care about your risk. You didn't care how much about how you were losing and the percentage you were losing. And you were not bothered to look at what was wrong with what you were doing. Rather, you were blaming the market, that the market is not doing well. The market is this, the market is that. So that's the reason that happens. So if you apply what I just said to you, to your trading, you begin to see some good risk management in place. Yes, I hope wealth, that's sorted, right?
Thank you.
Awesome. Right, if you are not clear more about it, contact me personally, I will speak to you. But at the moment, I think that's what you need to understand about risk management. Except you need training. If you need training or risk management, let me know. Okay. Shima, do you have any more questions? Those of you raising your hand, is there a question you want to ask or what? If you already asked a question, okay. Yeah, Shima. All right, go ahead.
Yes. Okay, now if I must understand the reason why you said that next week you are going to sell Gbpusd, right?
Yeah.
It's because it broke the psychological level and we tested.
Yes.
And it shows a reversal sign also there.
Yes.
Okay, that is the reason why you said.
Yes, I'm looking at that. Is my expectation.
Okay, will you say unless there is a consolidation in the ASEAN session?
Yes, it does happen, and it's already begun. So on Sunday night, you will see more of it.
Okay, now if I see a consolidation during the
you need to speak louder. I hardly hear you. I'm trying to hear what you're saying. Speak louder, please.
Okay. Now you are expecting a sale, right? You are expecting a sales, right?
Mm-hmm.
Okay, once there is a consolidation and you see a bullish candle, you know that it's a fake out, so you won't get involved in it.
Now, there might be, but if I'm expecting a sell, most of the time I stick to it. If there's a bullish run, it might go for 40 pips or 30 pips or even 20 pips and start dropping. So it doesn't matter what it is. As far as it is a sell, I will stick to the possibility of selling that market that day. So I'll wait for opportunity to sell. There may be a bullish run to the upside of 20 pips, 25 pips. The only thing I'll be concerned about if price break, if price break above the moving average, these two moving average, and then stay on top, then I can change my bias.
Yes.
Do you get it now?
Okay.
Then I can change my bias. But again, remember, I'm just showing you structures here, what to see. Because I know a lot of people don't use moving averages, but come on, moving average is just to know the trend of the market. It's easy to know where the market is going and then face that. So that's what it is. This is a simple moving average of 200. So everyone know what 200 moving average does. Okay. All right. Cheers, mate. Who is the next person who wanted to ask a question? We're about running up now. Yes. Papi, you want to ask a question? Okay, you already done that. I think we're done, guys.
Yes, please. I want to ask another question. Sorry.
Okay, go ahead.
The question I wanted to ask is, so as a trend line trader, how do you determine the market structure, first of all? And then second, how do you the beginning of a trend and the end of a trend? Those are the only two questions I wanted to ask.
Okay. First of all, as a day trader, there are 3 time frames that you have to focus on. But I do focus on 4. But 3 main time frames that you have to focus on. The 4-hour, you go there on the 4-hour time frame. Let me remove all of this so you can see what I mean. Okay, yeah, it's fine like this. You can still see it. All right. Now look at the 4-hour. What do you see? This is 4-hour time frame. Is price above the 200 moving average or below it? Where is he? Where's the guy that asked question?
It is below. It is below.
Good. It's below it. What does that tell you? Price is trending downward. That's 4-hour moving average.
Now we're in a downtrend.
Good, good, good. Now you're catching it. Then if you go back to 1 hour, is price below the moving averages or not?
It is below the moving average.
They are still downtrend. That's 1 hour. You go to the 15 minutes. Is price below the moving averages or not?
It's also below the moving average.
Great. If you go to the 5 minutes time frame for the scalpers, is price below moving average or not? It is below moving average. All right.
It's below it.
Good. Now, how do you know that price is reversing, is moving to the uptrend? It's simple as that. Look at how price moved. This is 5 minutes time frame. Look at how price moved from uptrend to the downtrend. It consolidated to break through. You see, it consolidated to break through. So there must be a retest. Sometimes the moving averages are like a magnet to price, especially when price is close to it. They are like magnets to price when price action is close to it. So you see, for a while, the moving average attracted this price for a while. Okay, but it couldn't break below. It went up a bit. So that was the first attempt to start going down, but it didn't work. So price went up. The second attempt was here. Look at it. This was the second attempt. The next day, it attempted again. Look at price, magneted to the moving average again. And then it finally broke above the first one, which was on the 5 minutes. So at this move already can tell you that price is getting ready to reverse, because you can see a downtrend already. Can you see that? If you put a trend line here, You can see it's no more sloping up. It's creating a higher high and a higher low, red. So right now, we see price doing this. So what you see here is a trend line up here and up here. So there's a triangle here that you can see that is forming on price. So you just draw that line and wait for a breakout. So immediately I draw this line here and draw this line here, I can see there's a breakout here. So that has given me a reversal. So I may not trade all of this. You must not trade everything. If you see that this one is happening close to moving averages, you just wait for it to clear off. And then at this level, price has finally cleared off now. At this level, we can now see that price has cleared off now. So we now know where we are. So here now I can freely buy, sell any market. If I get a sell signal, I'll just sell. All I need to do is to wait for a pullback, sell, pullback, sell. You get it? Do you get it now?
Yes, I understand you, but the problem I have is I don't use moving average. Like I use a naked, charts are always naked. I'll use only trend line, psychological level, with support and resistance. Those are the only things I use.
Let me show you that. That's what I use. Let me show you. I made it simple for beginners, but let me show you what you're saying. Very simple. Okay. Now I've removed the moving average back to 4-hour time frame. Okay. Right here, back to 4-hour time frame. Look at it. What do you see? What do you see?
Normally, it looks like we're even in a downtrend. It looks like we're in a downtrend normally.
But the downtrend has begun here. Look at it. In a this is daily. This is daily time frame. Sorry, this is daily time frame. Okay? We're already downtrend on a daily. Please, whose mic is that? Is it yours? Are you the one on the background with the noise?
No.
Okay.
No.
Okay. Are you not Papi? It's yours. It's yours. Okay, fine. All right, just listen. I believe you'll be paying attention now. All right, now look at that. On a daily time frame, we have a downtrend. Is a downtrend on the daily. I put my trend line there from here. You can see that. It's a downtrend on the daily. That is clear. Let's go to 4 hours. This is 4 hours. If you shrink in, you can see that I see a downtrend. All right. Okay. Remember, in every major trend, there is a micro trend inside. So this is a major trend. We can see that within that major trend, there is a bullish trend also in this major trend. This one. And again, another bearish trend. So there's a micro trend in every major trend. I want to pay attention to that. But as a day trader, you're looking at the overall. You're looking at your time frame, 4-hour time frame. Is it trending downward? Yes. But if you go to the micro trend, we are just coming out from a pullback, which is actually in 15 minutes was an uptrend. And then we are getting back to a downtrend again, which is a major downtrend. So in the 4-hour, we might expect price to see push up, maybe not, and then start dropping again. We are not sure. But I can see that is a downtrend already on the 4-hour. How do I know? It's simple. Look at it, very clear. Look at it there. I'll put a trend line here. That's it. Price bounce off there. So we have a push up, push down, another push up, push down is coming. So what? I know now the next move right now because I've seen this push up, another push down, push up. What is expecting? Price has already bounced off from there. So it's going down. So that's why I said next week on Monday, we're going to be expecting to sell. All right, now that is clear enough. Let me go back to the 1 hour time frame. What do we see? The 1 hour time frame is trending down. We can see again, price just bounced off that trend line, close to the psychological level. So there is a trend line here. I'm waiting for this break. If price break below this trend line, then we're taking it down. This is 1 hour time frame. For those of you who trade 1 hour, that's what you should be looking at from next week. You're looking at price to break this trend line here and then give you a sign and then you drop it. Okay, that is for 1 hour. Checking the trend lines, I mean the trend of the market. Then 15 minutes is your entry trend. But on the 15 minutes, we have a little bullish run taking place here, and which has already stopped running. Why? Because that trend line we had in the 4 hour and in the 1 hour is being respected. We see the trend line of 4 hours is being respected here. The trend line of the daily is still there. It hasn't been touched. Is it? Yeah, I think this one is the 4 hour. Or the 1 hour. This one is the 1 hour, I think. This one is the 4 hour. Oh, great. So you see this trend line here is being respected. So what? Price has begun to push down because it has pushed up and it's pushed down. So what am I expecting on this 15 minutes? I'm expecting price to break this trend line. All right. So before I make any trade on Monday, sorry, I'm expecting this trend line to be broken. That's why you see that trend line there. I'm expecting this trend line to be broken. That's a trend line, a valid one. So I'm expecting this trend line to be broken, and then I'll be expecting my trade to be around here. I'm waiting. This is 15 minutes time frame. I'm waiting for price to break, and then I'll be expecting to sell from there and catch 15 pips or whatever. But at this time, I'm not sure. I have to wait for the decision candle to be made. I have to wait for the highs and lows of the week to be created to confirm that we are still going to go down. It could be, as you can see, that the trend line has already been tested and he's reversing up. It could be there will be a consolidation in this level that gives us a triangle at that level, and then price could break down or break up. That's what we're looking at. Anything could happen, but I'm certain that price is going to break down. Why? Because this is a form of a flag. All right, flag pattern. Down, consolidate, drop like that. You get another one, consolidate, drop like that. Are you getting the idea now? Okay.
Yes, sir. Yes, sir.
So do you see how the trend is being formed? So I make it easier for those of you who are new to trend and all of that to understand moving average, and also to do it like this as price action. This is plain price action market structure. Okay, knowing the trend of the market that I just did now, using trend line and that. So I think we got it. So we have 2 more people raising their hand. Okay, guys, we got to go now. Let me just take one more question and then we'll be done. Shima, you're the one asking again. You want to ask a question? This will be the last question for today and we will be done. Go ahead and ask.
So honestly, I would thank you very much.
You're welcome.
Sincere, I'm guilty. To be sincere, I'm very guilty not paying for this. Only God knows the kind of knowledge you are just giving me.
I know. Honestly. You're welcome.
So please, I want to know about high and low of the day, or do you call it high and low of the week? It seems it has much impact.
Of course it does. It does. Well, these are the things we teach, but because you asked a question, I will just throw more light to it. And if you want to learn more, you just pay attention to this, what I'm saying now, because this is the only way I will explain it on this live trade. Live section. Now, the high and low of the day. of the week, which is the first thing. The high and low of the week is what you find from Sunday night to Monday morning. You're looking at the first two candles that print the first 2 4-hour candle period. So 8-hour combined, but 4-hour time frame. So you move to your 4-hour time frame, and then you look at for the first two candles that print from Monday morning. Let's assume this is Monday morning here, where this green line is. All right. So Monday morning begins. The first two candle will be 4-hour, 1 candle, second candle, 4-hour. In addition, 8 hours of the trading day. Already what we're saying is 8 hours of the trading day has already been passed. So this, and at this moment, we cannot tell that this has been what has been going on within that 8 hours time. So what? I will highlight the highest of the high of that candle. So if this one is a high, like you can see, this one is a high of the candle, I'll put a line there. I'll put a horizontal line there with another color. Then if this one happens to be the high, let's say this candle is like this. All right, this candle moved down like this. So I'll take this one as a high. I will take this one as a low. So I will look at how price move within this range. My decision will be to buy at any breakout up, to sell at any breakout down. That's how you do the high and low of the week.
Okay. Okay. Thank you.
You're welcome. Any other question? We are all set. Oh, okay. Then Chima, I've already answered your question, right? So there's no more question, guys. I believe you all understand and enjoyed this section today of review of the week, or trading of the week. So I believe I'm so glad that you guys, some of you actually accepted that this information has been very helpful to you. And I'm happy to do this any time of the week as the opportunity brings itself. So for those of you who are still find out about me and all of that, my link is already at the chat below. I've already sent you my link, and I'll paste it again. You can always reach me on all those contacts that is there. You can reach me by sending me a direct message. If you want us to have a one-on-one section, you can also reach me as well. All the links are there. You can join my Telegram group as well. All right. And there we're going to be having, in fact, this week, coming week, I'm really planning. Those in my Telegram group, I'm hoping for a huge profit week. So be ready. All right. We might even have opportunity to look at 1 or 2 other pairs addition to it, addition to GBPUSD. But be ready. It's going to be awesome. Okay. All right. Any other questions? No other questions. I'm going to actually call it a day now. Thank you guys for joining us. I really appreciate it. I'm going to make the video available for those of you in my Telegram group. So I'm going to send it to you. Every one of you there will get a free copy of this video. Thank you so much. I appreciate you all. One love. Peace.